Seadrill Ltd, the offshore driller controlled by billionaire John Fredriksen, filed for bankruptcy protection after working out a deal with almost all its senior lenders to inject $1 billion of new money into the company. Under the proposal, lenders will extend the maturity on $5.7 billion in debt, with no amortization payments due until 2020. Should lower-ranking creditors join the proposal, $2.3 billion in unsecured bonds would be converted into a 15% stake in the company, Seadrill said in a statement. The deal gives us a great liquidity cushion, allowing Seadrill to survive the mother of all downturns, CEO Anton de Boit said. The new capital is underpinned by top shareholder Hammond Holding Limited, and more than 40% of bondholders support the plan along with 97% of Seadrill's secured bank lenders, he said. De Boit expects more bondholders to sign up to the deal. Fredriksen spent more than 18 months trying to strike an agreement with creditors to restructure the industry's biggest debt load after crude's collapse curbed demand for Seadrill services. Earlier this year, the company gave itself a deadline of September the 12th to file a Chapter 11 reorganization case in U.S. bankruptcy court, just 3 days before $843 million of bonds mature. The new $1 billion investment will comprise $860 million in secured notes and $200 million in equity, and shareholders will receive about 2% of the post-restructured equity, according to the statement. Seadrill expects to emerge from Chapter 11 in 6 to 9 months, De Boit said. The shares whipsawed in Oslo on Wednesday, swinging between a 14% gain and a 20% loss before trading down 0.6%. More stock traded in the first 15 minutes than on an entire average day during the previous 3 months. The company said hedge fund Centerbridge Partners is investing in the restructuring deal, confirming a Bloomberg News report last week that Fredriksen and Centerbridge were in talks. Aristia Capital and Man Group plc's GLG unit as well as Saber Capital LP, White Box Advisors, Arkman Fintech are also investing in the new secured notes and equity, De Boit said. Current shareholders may end up with as little as 3 cents to 4 cents a share, while unsecured bondholders may see a direct recovery for unsecured claims of about 6% if they don't participate in new secured debt, analysts at Clarkson's Plateau Securities as wrote in a note. We see significant risk of the final words not being said yet, and the Chapter 11 process might be a long and painful process, the analyst said. The company's Chapter 11 petition Tuesday said that Seadrill had struck 2 deals to help it reorganize under court protection, a restructuring support agreement and an investment agreement. The initial court filing didn't include details about either deal. Seadrill doesn't envision asset sales as part of the restructuring plan, De Boit said. The company must get court permission to sign the lender proposal, which will then be incorporated into a reorganization plan that will go to creditors for a vote. The judge will take that vote into consideration before deciding whether to approve the plan. The company listed a range of $10 billion to $50 billion in debt and assets in its petition, which was filed in federal court in Victoria, Texas. Deutsche Bank Trust Company was listed as the company's biggest unsecured creditor with bond debt totaling $1.74 billion. Samsung Heavy Industries said Wednesday it has been in discussions with Seadrill on delaying deliveries of 2 vessels. Daewoo Shipbuilding and Marine Engineering said it already set aside provisions for possible losses on its order of 2 drill ships and isn't concerned about additional losses arising from the latest development. Hyundai Heavy Industries Company said it doesn't have any outstanding orders with Seadrill. Should the plan be implemented successfully, we consider it to be good for Seadrill as an operating company, analysts at DNB ASA wrote in a note. The plan seems to give Seadrill a solid liquidity runway and improved visibility, which we believe could help it win more contracts going forward. Seadrill has hired Kirkland & Ellis as its bankruptcy law firm, Howell & Loki as financial advisor, and Alvarez & Marcel as restructuring advisor. The case is in Re. Seadrill Americas, Incorporated, 17-60077, U.S. Bankruptcy Court, Southern District of Texas, Victoria. To get faster updates and the latest news from the oil and gas industry, please subscribe to the YouTube new video channel and connect with us on Facebook, Twitter or LinkedIn.